प्लेन और सिंपल वाइट शर्ट को बना दे स्पेशल और फैशनेबल। फॉग सेंट, न्यू फैशन वेयर फॉर मेन।
Good afternoon. Thanks for tuning in. You're watching Ask BQ on Bloomberg Quint. I'm Navneet Saluja D'Souza.
Hi, Navneet, and I'm Alex Matthew. Now, a lot of you are regular viewers. Thanks for tuning in. And for those of you who've hit this link for the first time, well, this is the show where we get all your stock-related queries answered. You can send them to us on Twitter, Facebook, or you can call us and speak to us on 022-454-04141. You can also mail us at askbq@bloombergquint.com. With all your written queries, do add the AskBQ hashtag. Keep all your questions coming in, and we'll take as many of them as possible. And let's get in our two experts of the day. Sameet Chavan of Angel Broking and Parthiv Shah of TRACOM Stock Brokers are here to answer all your queries. Thanks so much for joining us, and welcome to the show, guys.
All right, before we get to the individual queries, here's a quick look at what's happening to the markets right now. Well, the handover from US markets was negative. You had a gap down opening for most of the Asian markets, and hence our markets also had a gap down opening. But from those opening levels, we've recovered quite a bit, especially for the broader market indices. Still as we speak, Nifty is trading with cuts of 50 points, 10,500 mark is where it's trading. Sensex is also seeing cuts of nearly 0.5%. And what's really under pressure is the banking index. And not surprisingly, so far the Bank Nifty, which was underperforming, was on back of the losses that one was seeing for the Nifty PSU banking space. But in today's session, the Nifty PSU banking, if you could just pull up the intraday chart of that as well. So that's recovered actually. It's trading with cuts of 0.8%. That's the Nifty PSU bank. It did turn green in between, but there have been some shorts which have been created at higher levels. And the private banking index, that's seen sharper cuts in today's session, and that is primarily being led by the heavyweight ICICI Bank, which has seen cuts of 3%. Not only that, I guess the other heavyweight on the index, HDFC Bank too, has been trading in the red. But in terms of broader markets, let's just pull up those indices as well, which are off day's low. They opened with cuts of over 1%, but as we speak, 0.3% is the cut that we're seeing for both the Nifty small cap and the mid cap index. In terms of the Nifty contributors, which are the stocks that are dragging the index lower, as I mentioned, private banking space will play a role. So ICICI Bank right on top, HDFC Bank, L&T, and even Axis Bank from the private banking space is trading in the red. What's supporting the index is the likes of Infosys, ONGC, Cipla, as well as UPL. In terms of market breadth, let's just pull up that as well and check. That will give you a clearer picture of the broader markets. It still remains in favor of the decline. So 518 to 1033 declines, telling you the ratio is almost 2:1. I'm just going to point out a few stocks from the broader markets. Couple of gainers. EIH Associated. Remember, this is a hotel company which has been going up in the last few sessions, and today it's very closer to getting locked in upper circuit and also very close to touching its 52-week high, which is somewhere about 625 or 630. So watch out for this counter. In the same space, you've got Oriental Hotels, which is trading in the green. Graphite is the other one. Second straight day of being locked in upper circuit. That counter is gaining with about 5%. Well, on the losing side, what's locked in lower circuit? Well, Vakrangi, Gitanjali, they continue to trade in the red. And also you've got stocks like Lakshmi Vilas Bank that has seen a cut of 7%. And remember, we've been talking about the volatility which has been subsiding in the last few days, but this is the second straight day when we've seen India VIX also inching higher, though the gains are limited right now. It's just trading in the green with gains of nearly 0.6%. But in terms of participation, what sort of turnover that we're seeing in the markets, in the last few days, we've seen the turnover on the cash side actually dipping. And as we speak, the total turnover which has been recorded till now, it's 3.5 lakh crore.
Well, Navneet, lots of queries have already come in, and we're getting a lot of live queries as well. The first one that we're going to take is from Nabil, who has written to us as an email. He has 2,000 shares of Syntex Plastics that he bought at 70 rupees with a 4-year view. He wants to know whether he should hold or sell at this point. Currently, the stock is trading just a little lower than that 70 rupee mark. It's 65.5 as of now. And if we're talking about the business, well, it was demerged from Syntex Industries and it was listed separately in August of last year. And it has a custom moldings business, and it also has the retail segment, which we're talking about the plastic storage tanks that you've probably seen around the place. I'm going to come to you, Parthiv, with this query. The stock's corrected rather sharply so far in 2018. But if we're talking about the businesses that Syntex is in, they're more or less sanguine. If you're talking about the auto, the aviation space, and also the defense sectors, the long-term view should be positive. What's the 4-year view on the stock?
See, frankly, I think if you see and compare amongst the players in plastics, no doubt, I think it's a good thing that Syntex Plastics was demerged from Syntex Industries, because the textile business was capex heavy and was putting a lot of pressure. And despite the plastic business coming out with better return ratios, it wasn't getting re-rated. But unfortunately, I think even after the demerge, somehow I think we're not really happy with the quality of the earnings that the company has posted since the last 2-3 quarters. And that's the result why I think, despite when you see most of the peers in the plastic space, whether we talk of names like Supreme Industries, Phenolics Industries, all have massively re-rated, and I think they have maintained the quality of the earnings. Whereas I think Syntex Plastics hasn't done really well in terms of the share price performance, nor in terms of the earnings momentum. So I think we are not very bullish on this counter. Rather, I think we prefer other names in the plastic segment. So I think for me, at current juncture, a name like Nilkamal Plastics makes very good sense. I think they are market leaders in many of the things that they're into, especially the plastic-related furniture. Plus, I think they've maintained their raw material input cost extremely well, despite the volatility in the crude. And I think I still believe that this is a company which is generating fantastic cash flows. And I think they are continuously on an expansion spree. And when we talk about things like affordable housing, I think these sort of housing will have a lot of affordable furniture as well. So I think that's the place where a player like Nilkamal Plastics can do extremely well. So I think any day I would prefer Nilkamal over Syntex Plastics.
All right, so that's the view on the plastic space. You'd rather go for Nilkamal rather than Syntex Plastics. That's based on the performance in the recent past.
All right, that's the view coming in on Syntex Plastic. But we're getting a lot of your live queries on Facebook as well as Twitter. I'm going to go across to the Twitter queries first. Akshay Randev, he writes to us, and he's bought 1,000 shares of Vakrangi at a price of 182. With a long-term view, Akshay wants to know what should he do? Should he hold or sell? Well, clearly, Akshay was trying to buy the shares at lower levels, but the stock has been locked in lower circuit for 8th straight session today. And Parthiv, I'm going to come back to you. You know, lots has been spoken about. Vakrangi management has come out and tried to clear its stance with regard to buying shares into PC Jewelers, but that share has also taken a huge beating. They've also said they will be looking at buyback of their own shares, but clearly there has been no respite. People are trying, especially the retail investors who try to venture into at lower levels with a long-term view. What would you advise them?
Navneet, I do remember we had a similar query, I think, a couple of weeks back on Vakrangi. I think, and definitely the talk was back then that they've announced a buyback and giving a rosy dividend. And even at that juncture, when it was quoting somewhere around 250, 260 zones, I had clear-cut said it's an avoid for any sort of retail investor. Because I think one has to be very, very careful in such names, wherein I think if the share price goes down and gets hammered by almost 70%, and even after this hammering, if you look in terms of the market cap and look in terms of the potential, I think it still looks a little expensive to me. And whenever there is any talk of any corporate governance related issues, especially talks about SEBI wanting to probe, a company like Vakrangi Software, then I think they are using that surplus cash to park into PC Jewelers. All these things really make me nervous. And after that, we have seen continuously stints of lower circuits in this counter. So unfortunately, retail investor does not even get an exit when such things happen. So I think we have like a market where there are tons of other good quality stocks, good quality managements who are always away from any sort of controversies or huge gyrations in the share price movement. So again, even at this juncture, I think I would clear-cut avoid this counter.
All right. Now, thanks so much for that. But I want to go now to Sameet with a query that I had spotted a little while back. This one's from Ajay Kumar, and he writes to us on Twitter. He has 300 shares of Nitin Spinners, and he has a 6-month view on the stock. He wants to know what he should do with his investment. Now, he hasn't told us what level he bought at, but it's currently trading at 105. Now, it has lost about 9% so far in 2018. If you haven't heard about the stock before, it is a textile company that manufactures a range of cotton yarn. Sameet, what's the view? What are the charts telling you? And what's the view in the 6-month to 1 year period?
See, first half of 2017 was quite good for this particular counter. It gave a rally from the levels of 70 towards 130, and since then it has been consolidating, gradually declining towards its earlier breakout point. So that coincides with the weekly 89 moving average as well. So 195 seems to be a very strong support zone for this particular counter. My suggestion would be to hold on to it since it is trading around its important support level, its previous breakout point also. So he should rather keep a strict stop loss around 99 on a closing basis. If the stock slips below 99 and sustains below that, then we are likely to see further correction. Until then, there's a possibility of some kind of relief rally, and the positive momentum would start only beyond 120. So 120 seems to be a near-term hurdle. Once it surpasses that, you could see a decent up move towards 140, 145.
All right.
Okay, that's the view on it in spinners. You can see a move only after the stock crosses the mark of 120. But let's go back to Twitter queries. Adil Shah writes to us, he's bought 1,200 shares of Adani Power. Well, he's not written the buy price, but he has a 3-year time horizon. And he also wants to know if he can add more at current levels. And we know Adani Power has not performed well in the last 1 year itself. The stock is trading with around the levels of 31, 32. Parthiv, I'll come back to you. Do you think it's the best pick in the power space? And if yes, would you advise our viewer to add more at these levels?
Not really, Navneet. I think in the power sector, we've been very bullish on names like Torrent Power and JSW Energy, because relatively, if I go to see, these are like lot cleaner names in terms of them not massively adding on to capacities and increasing the debt burden. Vis-a-vis, if I look into companies like Tata Power and Adani Power, there's a reason why they have been lackluster in terms of performance since almost n number of years. And the biggest overhang being the Mundra Ultra Mega Power Plant project. That is a project which is currently eroding the net worth. And I think, yes, in between the stock did get excited in terms of talks about these projects getting sold to the discoms at 1 rupee. So though it would be at a loss and the company would have to take a write-off, but it was a positive news only because further net worth erosion would not have taken place. But again, it seems that thing has got delayed, maybe because of political reasons like elections as well. So I think we are not really bullish on a name like Adani Power. Rather, we are still very bullish on names like Torrent Power, which has done very well recently, and even something like JSW Energy, which is even very smartly talking about, I think, inroads into electric vehicle segment. And that is something which is keeping us excited. And also their assets that they have, they are doing operationally very well. And I think this is a company which can do extremely well going ahead in time.
All right, alternatives are suggested there. JSW Energy is an alternative that you should perhaps consider. But the next live query that we have is from Advait Supnikar, and he is planning to buy 300 shares of VA Tech Wabag with a 1-year view, and he wants to know whether he should get in at the current levels. The stock is currently trading at 554. It has been a bit of an underperformer, both in the trailing 12-month period and also so far this year. I'm going to come to Sameet with the query on the level as of now. What level should he get in at with a 1-year view, Sameet?
See, honestly speaking, chart structure does not suggest anything at this point in time. If we look at the overall volume activity in last 2 to 3 months, we don't see any significant volumes in this particular counter. So participation is on the lower side, and price wise also I'm not seeing any encouraging signs. So if I have to buy this particular counter, then first it has to surpass 580, 585, which can be seen as a near-term hurdle. The stock needs to cross this hurdle with a significant rise in volume. If that happens, then probably yes, we can expect a decent momentum at least towards 640, 660. But until then, I would certainly avoid this counter.
Okay, avoid the counter is the call coming in from Sameet. Let's move on to some live Facebook queries that we are getting, and this one comes from Abhishek Gupta. He's chosen few stocks. He's asking between Maruti Suzuki, L&T, which are your Nifty constituents, and Rain Industries and GNFC, which is a better bet with a one-year view. Parthiv, I'm sure all these companies are not comparable, but considering the return prospect, keeping in mind the time horizon being 1 year, which one according to you can be a better bet? Maruti, L&T, Rain, which has already done well in the last 1 year, or GNFC?
See, I think it's a tough one because I think there are a set of two mid-cap stocks, two large-cap stocks. But I think going by the way the market is in terms of the valuations and the trigger points, and also, I mean, this is a market where one will have to think about the safety of one's capital, because all these names, Rain Industry and GNFC, have had a lot of rallies. And if at all they'll end up missing 1 or 2 quarters, then I think there'll be a lot of capital erosion as well. No doubt they're great companies, but are currently doing well, but they are cyclical in nature. So I think going by that criteria, and also knowing that Maruti is also one of my favorite stocks, but a little pricey here, I think my bias is more towards L&T. Reason being that L&T, I think this year is going to be very crucial for them. They have up their guidance in terms of the order intake. Plus, I think they're working on higher ROEs. They're trying to execute their projects with better working capital efficiency. All this will lead to better quality of the earnings, which will lead to, I believe, further re-rating of the stock. And I think there is massive scope for infrastructure in the country where L&T could be a very, very big beneficiary. So I think L&T would be the company which, if at all the time horizon is only 1 year, I think my bias would be more towards L&T at current juncture.
All right, that's the pick of the stocks that you've chosen, Abhishek, between Maruti Suzuki, L&T, Rain Industries and GNFC. L&T is the pick of the litter. But let's go to Ritvik Sharma, who has also written in on Facebook with a query. He has bought 150 shares of Apar Industries at 750 with a long-term view. What should he do with the stock? Apar Industries, he has gained about 35 rupees on that stock currently. He has a long-term view. He hasn't specified essentially what his time horizon is. But Parthiv, what is the view on the stock with a long-term view?
We're bullish in this industry, and I think Apar Industry comes with fantastic quality of management. Plus, I think they are very good in the conductor space, which will be buzzing because Power Grid is releasing the orders, and I think their capacity utilization in that segment has been quite respectable and healthy. Even their cables business is doing quite well. They are also into fiber optic cables, which we are seeing like names like Sterlite Tech getting good orders and doing well. Same is the case with Apar Industry, and more importantly, I think their transformer oil business, where they command almost 40% plus market share. I think even transformer as an industry is looking with a revival, and I think with higher demand in terms of the power and the power distribution space, I think getting good benefits. I believe that the demand for transformer oil will definitely be there, and Apar is a very respectable name in that segment as well. So overall, if I see, I think it's a quality company. Note of the stock has run up and the valuations look slightly stretched at current juncture, but I believe with the scope of the industry and overall, I think the power ancillary stocks doing better than the relative power producers. I think one can hold on to Apar Industry with at least a 1 or 2 year view.
So if you're looking at a 3-year view so far, it has risen over 100%, Apar Industry, but over the last year, the rise has been about 7%.
Okay, that's the view in Apar. You can look to hold on. The counter is not doing too much, however, in today's session. Let's go across to Ravindra Gupta's query on Facebook. He wants views in Praj Industries with a 1 year view. So he's not mentioned if he's actually entered the counter or not. But in the last 1 year, we've seen some 16% return. But remember, for the year 2018, the counter has been pretty weak. It's down nearly 19%. Sameet, I'll come to you. If somebody wants to take a fresh position in Praj Industries at current levels, would you advise them, or they can be, or he can wait for lower levels?
I would be a contrarian buyer at current level. After seeing a massive rally from the levels of 60, 65, the stock has already seen a decent correction from the levels of 130. So 85 seems to be a very strong base, at least in the near term. So risk to reward ratio is quite favorable. It becomes a low risk buy at current level. So I would rather go long at current level. I would add on once the stock gives a confirmation beyond 100 and keep a stop loss below 85 on a closing basis. Once 100 is crossed, we can see a decent move towards 118 or 125 also.
All right. Sameet, what's the view on TVS Motor? Vijay has a query. He's bought 100 shares at 675. He wants to know what he should do, what the target should be rather on the stock with a 1 month view. Let's pull up that chart and see where it's at. It's at 673 right now. Yeah.
See, if we look at it from a slightly short-term view, it looks that, on the higher side, 690, 700 would act as a very strong resistance. So, if he's holding this particular counter, he should keep a small stop loss at 664. And, once the stock gives a bounce back towards, say, 685 or 690 also, I would rather ask him to book his profits.
Okay, that's the view coming in on TVS Motors. Our next question on Twitter is from Sarthak Khandelwal. He's bought 500 shares of Federal Bank at 104 and he's asking, can I hold it for the next 2 to 3 months? Remember, this counter was in focus after the board approved buying 26% stake in Equirus Capital. But considering the entire banking space has been weak in the last 1 week, so this too has succumbed to pressure because there were some brokerages who were quite bullish on this move of buying 26% stake. But Sameet, I'll come back to you. He's asking, can he hold for the next 2 to 3 months? He's bought at 104 and currently the price is somewhere around 93.
See, with a 6 to 8 months view, we are quite bullish on Federal Bank, KTK Bank. Any dip is, according to us, would be a good buying opportunity. But with a short-term view, there seems to be a very strong support around 85. So he can, as of now, stay put, keep a stop loss below 85. But in the near term, if this stock gives a bounce back towards, say, 110, 112, that would be an exit opportunity. But if he has a 6 to 8 months horizon, any dip would be a good buying opportunity.
All right. The next query we have is from Viral Vora, who wants to invest in capacity infra with a long-term view. Is this the right time to invest? Let's pull up that chart there and see where it's trading. It's currently at 323.55. Parthiv, what's the views on capacity infra?
See, we are bullish on select infra executors who are, I think, very good in terms of the execution quality, who have very good prestigious clients, and also they are having very good order intake. So Capacity Infra currently has an order book of almost around 5,500 crore. The execution capability has been fantastic, and they've had a very good track record in terms of growing their top line, executing them well, and also commanding respectable margin. But overall, I think last quarter was slightly tepid in terms of the margin profile, but the management did clarify over the con call that I think they will definitely up their game and improve the margins going ahead with the better orders that they have. So I think we are bullish on the story. Luckily, the stock has corrected from its recent highs, and at current levels, we feel that this is a good story. And overall, I think if one has a 2 to 3 year horizon with all the work that they're doing, and plus I think inquiries that they have in terms of the new orders, I think makes us excited about this story. And as such, many of the players in this segment, they are still struggling with the over-leveraged balance sheet. So I think a lot of unhealthy competition is out, which will help players like Capacity to execute better.
All right. All right. Okay. So bullish on the infra space.
Okay, and that's the view. I think it's a recent listing of last year of Capacity Infra. So keep a view on that counter. The other one, this is on Facebook. Sagir Kazi writes to us. He's bought 1,200 shares of REC at a price of 108, and he bought these shares actually 2 years ago. He wants to know if he can hold on to the stock for the next 5 years. Okay, he's in the money, but considering he bought 2 years back, the returns have been just about okay. Parthiv, I'll come back to you. So he's making money, pretty much in the money by about 40-45% higher. In terms of holding the same stock in the portfolio for the next 5 years, would you advise him to book profits in REC and buy something else, or he can continue with the same stock?
Frankly, I've never been a fan of any government-run NBFC, and especially keeping a 5 year horizon always makes it more and more difficult. These are at best value plays in terms of valuations will always look cheap on the face of it, and very good dividend plays. But I think overall, if you see in terms of the growth strategy, unfortunately, the lending business model of companies like REC and PFC are restricted only to the power sector and the discoms. And still, I think despite all the efforts, the discoms have not completely revived. So that does not make me very bullish. I'm rather any day would prefer a privately run NBFC, wherein the business model does not restrict them to lend to only one vertical. Rather, I think a diversified lending model would tend to command higher ROEs. And I think NBFCs having better ROEs are the ones which create a very high shareholder value. So amongst the names, I believe a name like L&T Finance Holding fits the bill. The management is razor focused in terms of improving the ROEs from current levels, even improving on parameters like cost to income. So I think I would any day prefer for a 5 year view a name like L&T Finance Holding vis-a-vis an REC.
All right. The next question that we have, I'm going to take is Shiraz Pawaskar's query on Twitter. Shiraz wants to know about Sun Pharma and whether halal clearance will create a rise in the stock, maybe to a level of 650 to 700. The purchase that was made was between 520 to 580. So Shiraz's average price is 550 for about 1,000 stocks. Now, still a bit of uncertainty about what is happening with regard to the clearance of the halal facility, but I'll come to you on this, Parthiv. What's the view on Sun Pharma? How are you reading the situation that is currently ongoing? All right, so we'll come back to that question with Parthiv, but then let's look at the current levels and whether the technical support rise in the short to medium term. And I'll go to Sameet on that question. Sameet, what's the view on Sun Pharma? What are the technicals telling you?
See, we have been quite upbeat on this stock. We have been upbeat ever since this stock gave a decent reversal on weekly charts from the levels of 478. So we remain bullish on this stock from the levels of 478 at 550, at 580 also we were bullish. But according to us, this is not a trading bet. We would remain upbeat as long as this stock remains above 500. So according to us, if you have a 5 to 6 months horizon, then any dip towards 510, 520 would be a good buying opportunity. And we expect this stock to surpass its recent hurdle of 600 quite soon. So with a slightly medium term view, we are quite bullish, and one should keep a strict stop loss below 500 on a closing basis.
Okay, so keep a strict stop loss below 500 for Sun Pharma. Remember, the observations may have come down, but if you look at the stock, we've not seen any significant returns in the last 1 week, because there was one day when it fell nearly 8%, but post that, it just recouped the losses that one saw in the previous week. But on that note, we'd like to thank both our guests. Thank you very much, Parthiv as well as Sameet, for helping our viewers with their queries. Well, that's all that we have on this edition of Ask BQ.
But do remember that we are just a tweet, post or call away, so do keep your queries coming in, and we promise to answer as many of them, rather not all of them, on the show as we go. You can log on to bloombergquint.com and search for the hashtag AskBQ and get all the answers to the queries that were discussed on this show. Up next on Bloomberg Quint Live is Power Lunch, so do stay with us. Thanks for watching. This is Bloomberg Quint.